Good morning, everybody. Good morning. Today is Thursday, May 28th, and this is our QOL Trading Pre-Market Analysis. So if you're new to the channel, subscribe to the channel, and then hit that thumbs up button, like this video. And then also down below, there's a couple links. One to go to our website, so you can put your name and email address in there so you can get our free subscription of our weekly recap and then the Markets Ahead newsletter that we put out every Sunday. And down below that, or I'm not sure where it is, below or above, but there's access to join our Discord community. That is free. And then if you want to also go beyond that, you can join our trading desk for some live trading from 9:30 a.m. to 11 a.m. Eastern Time. Anyways, let's get on to things right now. Economic data this morning coming out. Core PCE price index is down a little bit. I'm not sure how that's going to react. It may actually be positive. GDP was down. It was 1.6, expected 2.0. Price index quarter over quarter, pretty close. Unemployment claims, 215,000 went up. That's gotta, I think that's gonna have to help things actually. And then what else do we have here? Personal income. I don't really know what that number is going to really represent there. Personal spending in line. We have some Fed speak today. New home sales at 9 o'clock. More Fed speak, and then I don't see anything else here. You know, there's a lot of Fed speak throughout the day today. Not Kevin Warsh, though, so I don't think it's going to impact things too much. We could take a quick peek at tomorrow, Friday. I don't see anything for Friday. Goods trades balance. Not sure that's going to do anything. Wholesale inventories month over month. More Fed speak, and that's going to be about it. You have Chicago PMI at 845. So something could happen there, even though it's a yellow folder. So anyways, let's get into things. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, and like this video. Let's cruise. We're going to fly through this today, people. So VIX, here's the VIX right here. Let's just make this a little bigger for everybody. Got a little gap up happening right now. However, we are below the 20-day moving average of 1739, which is nice. I'd like to see us get back down to this 1574 level, maybe even below that. For things to really subside. Things are still a little up in the air with this peace talks with Iran. As optimistic as I'd like to be, I'm not. I've seen this before. Whenever there's some kind of negotiations going on there, hopefully it'll work its way out here. That being said, let's get into the oils here. Brent crude right now, it is below $100 a barrel, which is great. We do have a little gap down here from the 26 at 99.57. I wouldn't be surprised if it comes up, pops that number right there, and also maybe even above that, and gets to that $103.58 a barrel as well. I think once they come, they open up the straits and oil is moving slowly. I still think it's going to take some time for the prices to start coming down at the pump here locally here in the States. I would like to see us get down here. This is Brent. Let's see Brent get down to $88.40 a barrel, but we are below the 20-day moving average at 105.22. So that being said, if that stays there, that's not going to be bad. I think there's going to be a new norm for oil anyways. I know everybody's expecting it to go back down to $60 a barrel, but I just think that there's going to be a new norm because, what people may not realize is we are a net exporter of oil. So when oil is elevated, it's actually good for equities. It's bad for our pocketbook at the tank, but it's good for equities. Anyways, you have a gap down here. Same thing on just as Brent crude at $94.87. Above that, $96.99 gap down from the 22nd. We are below the 50 at $97.87 and the 20 at $99.16 a barrel. Would like to get down here to this 100-day moving average at $83.07 a barrel. That would be pretty good here. So now let's get into the broader markets now. ES, like I said yesterday, all-time high is crazy. 75, 70, 75 is all-time high. Pullback will be healthy for the market. However, if you look at this holistically, this rally since March 30th has been pretty something special here. 12, almost 1,300 point move. since March 30th, almost 2 months there. So really special there. So now on the downside here, we'd like to see some pullbacks. Maybe this 20-day moving average at 74.12 would be a decent pullback there. I've got this level right here of 74.85.70 could be a decent pullback level here to take a long if you want to be a little aggressive up here. Everybody is sitting on the sidelines waiting for a pullback. It's not happening yet, people. So just when people thought that it was kind of like on the top, definitely overbought at the end of March. Well, 1,200, 1,300 points later, still grinding higher. Do have a little gap up here. I would say you could probably put it right in this. I'm not even going to put anything on there. 74.85.70 will take care of this gap up that we've had here since, what was that gap up? That was from last Friday. So that'd be a good level, 74.85.70. As far as the upside is concerned, I don't have anything up here until 77.59.35. And then above that, I've got a regressional trend line here since June of 2023, sitting at 78.34. Probably get some resistance up there. This level here of 77.59.35 is a 200% Fibonacci extension number. So again, we're uncharted territories, people. Above this midline regressional trend line here, I do have another level up here at 81.37 from October 12th of 2022. So those could be some pretty high levels to reach as well. So let's get down to the SPY. Let's try to cruise through this today. SPY is very similar here. All-time high 754. I would like to see that pullback maybe into this Friday high of actually this was a Friday high of 2 weeks ago at 743.46. That would be a pretty decent level. If we lose yesterday's low, I don't see much here stopping us here. This is a gap up here too. So you have a gap up here from Friday. And I would say sitting at 744.30, so between 743.46 and 744.30 would be the level of a pullback there to close this gap here. So I would say you lose today's low, you're going to probably get some little flush down here to these to that high right there. You've got a point of control. Actually, we do have some open point of controls, I thought here. Let's take a look here. Well, that point of control that's filled yesterday. We have one that's not one there. No, these are filled, but it's still a decent level. I think we have our open point of control. We don't have until, a true open point of control is not down until 682.26. So we want to look at that for today. If the market starts flushing and we start having multiple days, weeks of flush, it'll start to come into play later on down the road. In the meantime, we're above the 20-day moving average. We're above all the moving averages right now. The 50 is sitting down here at 700. So while you're above all these moving averages, same thing I said yesterday, you're not looking to click the button and buy out right out of the box. You're looking for pullback longs, right? So the market's going to flush. Hopefully you use the levels and you trust your levels and use your stops along with those levels. So previous all-time high here, 749.53. I would say you're going to need to stay above that in order to push higher. You do have the close here. It's messing with right now. It's 750.51. So watch your levels, people, and then pay attention to tweets. The tweets are what's moving the market right now to find out if there's any kind of deal that's happening in Iran. I suspect my opinion on the marketplace is once a deal is official, if it ever does become official, I think that's when the markets will start to flush and get some pullbacks. Now, it's almost like buy the rumor, sell the news, right? I said that yesterday. I'll say it again. And I'll continue to say that. You have a gap up here from the 22nd as well, sitting at 29,000. What is that? 536.83. So I'd like to see a pullback into that level. That would fill this little gap up here from the 22nd. If you lose that, you do have an open point of control sitting here at 29,260.90. Quite a bit of ways on the downside right now. But as far as the upside, you can see right now there is something starting to form right now, right? So you have something a little stair stepping down right now you have to be aware of. So I would say if you get above yesterday's close, then that's going to negate that stair stepping lower. But if we do reject yesterday's close and we continue to move lower, this could be the beginning of a stair step lower. So watch your levels. Don't just come clicking the button. However, I am, you do want to see a good flush so you can, look for areas to get long, right? And as long as you're holding your 20-day moving average, you'll still continue to move higher there, right? So let's get over the NASDAQ. Excuse me. Let's get down to the Qs. The Qs, Same thing on the Qs, all-time high 737.60. Right now, we're toying with yesterday's close. Do not think long until you get over yesterday's close. As a matter of fact, you could probably put something here for yesterday's low. So we're kind of caught in between the close and the low. I would probably use one or the other for your basis of your trade. If you break above the yesterday's close and hold it, take a long, or you could probably have your thesis of taking a short with a stop just above that, right? If you lose this low from yesterday, I think you're going to come lower, definitely into the previous all-time highs, 722.03. If you lose that, you have a gap up here from last Friday, 715.26. So you can see right here. Here's how I form my gap ups. I just didn't put the orange rectangle on it today. I just put the base of the close, and then once you lose this level, I think you can take your trade all the way down to that gap down there at 715.68. You have a point of control open below that at 710.03. So if there is a head of steam, I would not just say, okay, if the market pulls back here, buy, right? And that being said, I'm giving my opinion of the marketplace. This is all for educational purposes. You have to do when making your own trades. It's all based off of your own discretion. I have been trading for many years, and I really I've become a better trader since I started this YouTube channel and mentoring people how to day trade. Right. So, anyways, let's get over to Tesla again. If you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video. I put a couple links in the chat area there. You can come to get to our website and also get into our Discord channel there for some live trading if you want, and also some videos and educational information that I do from time to time here. So Tesla, let's get into Tesla yesterday. Tesla was, it came up and closed, it hit this point of control yesterday from the 14th like a champ. Right on the open. I saw it happening and I did not react right away. But now we are going to take this point of control here and we are going to say filled. So this point of control was open since the 14th of May, and it was filled yesterday, 27. Boom. However, I leave that level up there because you could see the reaction. It was a fantastic level of reaction there. So this is a gap down from, when was that gap down? This is gap down from the 18th. So let's just take a peek at what the 18th looks like here. Let's just let's go 10 days. Right, so so right here, I'm going to leave that up there as well. If you get above these levels, 444.62 level, you're going to push in that 453.40 level. You also have an open point of control just above that at 455.18. On the downside, right now, I would say you have this low from yesterday, 435.46. As long as you are over this low, your longs are in. If you lose this low from yesterday, you have this 433.57 price level. And why did I put that level in there? I put it in there for a reason. And not sure why I have that level in there, but I'll leave it in there right now. I think it was based off of this candle right here in the post market here, and it kind of gave you a nice little bounce off it yesterday. So I'm going to leave that level in there. So I think you could possibly base your thesis on one, obviously, if you're above yesterday's low, longs are in. If you lose it, you come back down here to this, maybe a couple dollars lower, this 433.57. But again, this is pre-market, people. There's not a lot of, there's no volume here, right? So be careful on these candles getting too excited, looking at this big candle right here, like, oh my God, look at how big this candle is. We're looking at a 15-minute chart. There's only 100,000 shares traded on this 15-minute chart, right? So if you go here to the last hour of the day, there's 1.4 million shares traded, right? And this candle looks a lot more aggressive than the close, right? So I always tell you, pay attention down here. This is where your money's made. Watch your levels, right? So now let's get into this new indicator that we've been talking about. Let's start out with let's go to the 1 minute because that's where the big success ratio is. So here is yesterday's 1 minute. And let's get on to, I wonder if it's, there we go. Okay. So here is our new code trading. You know, I guess you can call it an algorithm. But right now, what you see on here, this is all generated once the market opens. And I want to go over to a little better today. So let's start out with how all of these lines are configured, all based off of this first candle of the day. So you have this dotted line right here, and that little dot, that little orange dotted line there, that is the high of the pre-market right there. Okay. This dotted line here is the low of the pre-market. So if I scroll back, it'll show you where the low is, and the low is right in here. Okay. So those two, it starts right there. Then, so that is pre-market right now. Okay. So that happens before anything even happens. I mean, if we go to today, you could probably see if it's forming yet. It's not forming just yet because we still have 45 minutes until the market opens. But as you get closer to the market open, these yellow dots right here, yellow dotted lines here, they start to form. They give you the pre-market high. They give you the pre-market low. Once this, whatever time chart you're on, I have this code written for the 1 minute, the 2 minute, the 5 minute, the 15 minute. Okay. So you could put this on any time chart and you could do your back testing. You could do it on any of the Mag 7 stocks. And we'll get into that after I go over this. So here is the 1 minute chart. And the 1 minute chart has been showing for Tesla. It's been showing between 94 and 96% win rates over the last 40 days that I've done testing for this. Now, what does that mean? That means in the day after your levels are formed, it will hit one of the price targets, whether it's a short-sided price target or a long-sided price target, 96% of the time. So what's happening with this code? I developed this code off of my trade strategy that I've built through the years, and I've built it off of a 5-minute opening range. So most people do that. You start with the 5-minute opening range. Why? Because if you look down here, your first 5 minutes, this is where your heavy volume is. And then if you break the range one way or the other, then you look to take a trade in that direction. Why? Because that is giving you an idea of where the market is heading. Now, it doesn't necessarily mean just once you break it, you take a trade. Like, so if you looked yesterday, if you broke that 1 minute opening range right here, you got faked out. However, I wanted to create something where it took away a lot of the discretion. So what you see here, once this first 1 minute is created, you now have a red dotted line here. You have a gray dotted line right here in the middle. Let me remove this. I'll remove that so it makes it clean. So that is generated also from the computer generated. And then you have a green dotted line here. Now this green dotted line is the high of the opening range of the 1 minute, and this red dotted line is the low. And then this gray in the middle is the midpoint. So you could base your trade strategy off of anything. Now what you're going to see here is you see all of these arrows. These arrows are telling you when you could take a trade. It's not saying, yes, take a trade here. It is giving you an indication of, it's all based on volume and levels, when you could take a trade. This arrow came in here to take a trade here. Why? Because volume came in and it broke the 1 minute opening range trade. So you could have taken a short right there. So then, but you have to pay attention. The first 5 to 10 minutes of the day, it's really volatile. So you're going to get multiple signals, right? So you can see here, right here, this is the first 10 minutes of trading. And you literally had 1, 2, 3, 4, 5, 6 signals within the first 10 minutes of trading. And then once the market found its direction, then you had one signal here at 9:41, and then the next signal didn't come in for another 9 minutes. And then as the day starts moving on, your signals are few and far between, right? And then when you start getting a lot of signals in here, all this is telling me, which I've learned from the code, is that this is just chop fest. It's giving you a signal up. It's telling you to get out. It's telling you to go down. It's telling you to get out. It's telling you to go, take a long. It's telling you to take a short. This is a chop fest, right? This is what you want to stay away from, right? You want a signal. You want a clear-cut signal. Something in here. It did not tell you to get out, and then boom, it hits your price target, right? So going over the signals, this red arrow right here is telling you to take a sell. the yellow square, of which you see all over, I call it the yellow square of death. It's telling you whichever direction you're taking that trade, consider getting out of that trade. Or you could base a trade off of this. So let's say you never took a sell and you're waiting for that square to reverse, right? That yellow square is identifying there's a potential reversal coming into play. So whatever direction the market's going, this square, yellow square, is telling you it may be out of steam at that point and consider taking a trade the other way. And when the market did, give you a square here, you did have a move from 441 all the way up to 444. So you had a $3 move from the yellow square of death, of what I call it yesterday. So anyways, getting back to it, you got a little fake out here. It told you to exit your calls right here. So it told you you're wrong. So you get out of your trade, right? Then it gave you your signal in here. You broke your range of the 441.97, and then you got a $3 move down at 9:43, 13 minutes after the market was open. Your first price target was hit. It completely justifies your 96% win rate of hitting a price target. Not only did you hit that first price target, but then at 19 minutes after the market was open, it hit the second price target, right? So your blue line on the top here, your solid blue line is your first price target if you're taking a long, and your dotted blue line is your second price target, right? If you get continuation. On the downside, your first solid purple line, that we call it purple. It's not purple. I think it's magenta. I'm not sure. That's your first price target. And then your dotted purple line is your second price target. And then all the rest of the lines that I have in here, this line is generated. This is the previous day's close, right? So you got to watch that. And we already went over this. This was the pre-market high, or pre-market low rather. And then I just have my other levels in place for more confirmation, right? For taking my trades. So that's pretty much that's Tesla's indicator here. And if you come into the Discord channel, you will see this done live, and you will see these indicators populate as the market is moving. So this is a 1 minute right now. And so I want to show you something that's even better. So here's the Mag 7. Every Mag 7 stock hit their price target yesterday. So let's go over, we'll cruise through this. This was Tesla. We already went over Tesla. Tesla hit its price target on the downside. Let's move over to NVIDIA. I'm going to go pretty quick through this, right? I just want to show everybody this. So NVIDIA, boom, hit your price target. Not only hit your first price target, I would say at about 956, hit your second price target. Probably, confirmation right here, 956, right? So almost an hour and a half after the market's open, NVIDIA hit their price targets also. Now, how you monetize this, I do my trading through options, right? So if I think the market's going down, I'm buying puts, and I'll get to Tesla in a minute on how I monetize that. So here's Apple. Apple, boom. Apple got up, hit your first price target at 903. Nice move on Apple, $2 move on Apple. That's a big move for Apple. It's not quite like Tesla. Did not quite hit that second move, but you got your first price target, and this is all on a 1 minute. So let's move over. That was Apple. Let's move over to Meta. I forgot Amazon down below. Meta, boom. Hit your price target here. You really didn't have to sweat with Meta yesterday. So you hit it at 922. Not quite an hour after the market was open. Nice $3 move on Meta. And then that was it for the rest of the day. But you can see how these levels that are generated from the computer, that you use them as support and resistance levels, right? So you broke this one level, you can then use that as a break and retest, right? So let's keep moving forward here. Let's look at Google. Google yesterday, boom. Google hit your first price target, 901. Half an hour after the market was open, your day is done, people. This is really, it's really going to be something special here. We're probably looking to get this out to market probably in mid-June, hopefully sooner than that. The worst scenario, end of June, but we're just trying to finalize, all the APIs agreements here. So we're looking at Amazon here. Amazon, hit your first price target, 1003. Little waiting on Amazon, hit your second price target, 1140. So I'm just going through this, and once you figure out how to utilize this indicator, which I teach as well, there's a lot of money to be had. Here's Microsoft. Last one we're doing right now, Microsoft, you actually hit your first price target, and it told you to exit the call right there after it hit that first price target. and then there was a huge flush after that. And that happened at 8:48, 18 minutes after the market opened, people. This is really going to be something good on the horizon. So I want to share with everybody. Let's talk about what we're going to do for today. I'm going to have tomorrow's expiration date, which is going to be May 29th. I'm going to start with the 445 calls. You can see right now we're probably about 438 right now. So these calls will probably be a little cheaper, I think. Where did we close? Yeah, we closed at 440. So they'll be a little cheaper, probably, I would say low fours, maybe high threes. And then we're going to start with the 435 puts. And these will be a little more expensive. They close at $4 because we are a couple dollars lower than the close. I wouldn't say that much more expensive. Maybe 30 cents higher. So I would still think that we're going to be in the fours with this. So getting back to how I monetize the trade, right? So like if we go back and we look at yesterday's trade, even though I have this on the top side here, I always have my call trading platform on the left side and my puts on the downside, right? So if I think the market's going up, I'm hitting my calls. If I think the market's going down, I'm hitting my puts. On the right side here, I've got a 1-minute chart and I've got a 5-minute chart below that, right? So this has nothing to do with what way, this is not associated with my calls and this is not associated with my puts. This is just a chart, 1 minute and then a 5-minute, okay? So yesterday, the way I monetized things yesterday is once you broke, this is a 1 minute. Once you broke that 1 minute right in here, you took your short. So that meant I bought my puts. And then as you buy your puts, if you think the market's going down, when you're buying your puts, this premium price rises, right? So for every one lot you buy, if the market moved down $2, you could figure a 2-to-1 ratio, meaning that your premium price is going to move up $1 for every $2 that the equity price moves, right? So that's pretty much what we're going to do for today. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button like this video, and then also hit those links on the right-hand side in the chat, or you can go down below in the description and find those links in there as well. And hopefully we'll see you in the Discord channel for some more educational information. And then if you want to go further and you want to learn more about this indicator and also opportunity to ask questions, I answer questions because you're not trading for an hour and a half straight, right? You're looking for setups and you're talking about what I'm looking at. I identify that when I get into a trade, the first thing I talk about is where's my stop going to be, not where my take profit is going to be. So anyways, that's going to be it for today. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video. If I don't see everybody in the Discord channel, I will see everybody tomorrow morning on the pre-market analysis. Have a great day. Talk to you soon.